In this webinar, we're going to talk specifically about premium tax credits. Now, this started last year. Many of you may be familiar with this credit, but there are some pointers in this webinar that might help you out in the upcoming filing season. And there are some upcoming changes based on the 2015 year rather than the 2014 year. The information contained in this presentation is current as of November 24th, 2015, and we strongly encourage you to continually visit irs.gov for the latest tax forms and instructions. We'll go over the forms and instructions that are used to calculate the premium tax credit, but not in great depth. So you may want to visit the website to look at those forms and the instructions a little bit closer. For the latest information about all the provisions of the Affordable Care Act, you want to visit irs.gov/ACA. Okay, here's an agenda about what we'll discuss today. We're going to look at the background of the ACA. We're going to talk about the basics of the credit, eligibility, how to file, reconciling the advance payments that your client might have received. We're going to look at some common errors, and finally, take a look at some resources that will help us with the premium tax credit. Before we begin with the premium tax credit itself, I want to talk just a moment about the marketplace. You may have heard this information before, but we continue to share this information because reminders are always helpful. This is a new area of tax law, therefore a new opportunity for all sorts of issues and types of situations to come. We want to make sure that everyone is aware of the marketplace and its role in the premium tax credit. The marketplace can either be maintained by a state or it can be the federal marketplace. The federal marketplace provides information at healthcare.gov. If your state maintains a health insurance marketplace, it will also maintain an information website. The marketplace enrolls individuals in health coverage. It handles the administrative side of things. It offers financial assistance through the premium tax credit. Now keep in mind, the IRS does not offer the advanced premium tax credit. It doesn't come from the IRS. It has to be applied for and approved through the marketplace. The marketplace will also issue the Form 1095A, the Health Insurance Marketplace Statement. Now, many of you may remember last year there were some issues with these statements. Keep in mind, last year was the first year, and hopefully they've worked the kinks out of the system, and the 2015 statements will be issued without any problems. Again, keep in mind, the IRS does not issue that form. It comes from the marketplace. Now, just a little review question. What is the only source of advanced premium tax credit? The IRS, the health insurer, the marketplace, or the tax preparer? You're right, the marketplace. Now keep in mind that the IRS only administers the issuance of the premium tax credit. It has nothing to do at all with the advanced premium tax credit. So let's look at what the premium tax credit is exactly. To be eligible, an individual or family member must have enrolled for health coverage through a federal or state health insurance marketplace. It helps individuals and families with the cost of purchasing health insurance from the marketplace, and their household income must be between 100 and 400% of the federal poverty line for the family size. But there are some exceptions. Of course, with the IRS, there are always exceptions. Essentially, the credit reduces a person's out-of-pocket cost incurred for health insurance premiums, and that's why they call it the premium tax credit. The credit is based on a sliding scale, with the larger credits being available to those with lower incomes, very similar to the earned income credit. Other factors that affect the credit include which family members are enrolled, whether any enrolled family members are eligible for other health coverage, the cost of the health coverage, the premiums for the planned enrolled-in family size, and also where they live. Eligible individuals purchasing insurance through the marketplace may have advance payments of the estimated credit paid directly to the insurance company, or they can pay all the premiums themselves and get the full benefit of the credit when filing their tax return. Advance payments of the estimated amount of the credit are paid directly to the insured throughout the year. The advance payments of the credit lower the cost of the health insurance premiums that the individual must pay each month. Eligible individuals may choose to have the full amount or a lesser amount of the advance credit payment paid directly to the insurance company. Getting advance payments of the anticipated credit is done through an application only at the marketplace. This application process takes place only at the marketplace. The amount of the advance credit payment is based on the amount of a person's estimated household income for the upcoming year, along with other factors such as family size, state, and other circumstances. Now let's look at eligibility. To get the premium tax credit, your client must meet all of the following. The client, spouse, or family member enrolls in a qualified health plan at the marketplace for 1 or more months in which the enrollee is not eligible for other minimum coverage through an employer or a government plan. And to enroll, an individual must be a U.S. citizen or lawfully present and cannot be incarcerated. Household income has to be between 100 and 400% of the federal poverty line, and that's adjusted yearly based on inflation. If the taxpayers are married, they cannot file married filing separately, and again with some exceptions. They cannot be claimed as dependents, and they have to pay or have someone else pay the premiums by the due date of the tax return for the year of coverage for 1 or more of these same months. Generally, married individuals can't get the premium tax credit using the married filing separate status unless they meet the criteria in the temporary regulations which allow certain victims of domestic violence or abuse or spousal abandonment to claim the credit using the married filing separate filing status. There's more information on the IRS website concerning these criteria. Also, if they qualify, married individuals may claim the premium tax credit using head of household filing status because for tax filing purposes, these people are treated as unmarried. Married individuals who do use the married filing separate filing status but do not meet the criteria in the temporary regulations are not allowed a premium tax credit unless they repay all of the advance credit payments made on their behalf, which are subject to a repayment cap. And generally, to be an applicable taxpayer, the taxpayer's household income must be no less than 100% of the federal poverty line. However, individuals whose household income is estimated by the marketplace to be 100% or higher and received advance payments of the credit, but then have household income that falls below 100% of the federal poverty line for the year, typically because of a change in circumstance, will still be treated as applicable taxpayers and still be allowed the premium tax credit as long as they meet the rest of the criteria. In addition, under a special rule, individuals with at least one family member who is an alien, lawfully present in the United States but not eligible for Medicaid who enrolls in a qualified health plan through our marketplace are treated as applicable taxpayers even if they have household income below 100% of the federal poverty line as long as they meet the other requirements. Now, a key point to remember is that many people already have qualified health insurance coverage, which is called minimum essential coverage. You probably have heard of this term. This coverage can include coverage through their current employers, through Social Security, or other medical plans. If they have other non-marketplace minimum essential coverage, they do not qualify for coverage at the marketplace and therefore do not qualify for the premium tax credit. Now let's look at a quick review question. Can someone buy insurance through the independent or individual marketplace and qualify for the premium tax credit? Yes or no? Well, the answer is no. Now, you're going to get questions on this. A client may come in and say, I went to the individual marketplace and bought insurance. Can I get the premium tax credit? Now, the answer to that is no. What the client's talking about is when he or she says the individual or independent marketplace is going directly to the insurer and buying the insurance. If they do that, they do not qualify for the premium tax credit. They must go to the federal or state-operated marketplace, buy the insurance through them, and then be approved for the advanced premium tax credit or for the premium tax credit period. You just need to be aware of some of the terms that your clients might use when they talk about buying health insurance. Now let's talk about the federal poverty line. We're not going to spend too much time on this because it's pretty basic. For one individual, that number is $11,670. So to be eligible for the credit based on income limits, you've got to be between $11,670 and $46,680. That's 400% of the federal poverty line for one individual. This is an average all across the country for a family of two. That can be a single parent and a child, or a married couple, $15,730 up to $62,920. If they buy insurance through the marketplace and they have this income level, they can still possibly qualify for the premium tax credit. For a family of four, $23,850 up to $95,400. That's pretty hefty income for a family of four, where they can still qualify to get some help from the premium tax credit. Now, when taxpayers enroll in marketplace coverage, they may choose to take advance payment of the premium tax credit, which is sent directly to their insurer. As part of the enrollment process, the marketplace makes the determination whether or not the applicant is eligible for the advance payment of this credit. But if your client does take advantage of the advance payment, then you need to know how much. Again, the insurance company bases this on the estimated income that your client will report on the federal income tax return. When the advance payments are made to the insurer, your client may still need to make a monthly payment to the insurance company. Now, remind your clients that there are several important considerations involved with the choice to receive the benefit of advance credit payments. First of all, they're optional. Second, they must be reconciled with the actual credit allowed when they file their tax return. The difference between the advance credit payments and the actual premium tax credit allowed, which is computed on the tax return, are more than likely going to be different. Changes in circumstance can certainly affect these differences, and you must file a tax return to reconcile these differences and to claim the credit, even if you're otherwise not required to file a return. This is important. They must file a tax return if they get advanced premium tax credit, whether or not they're otherwise required to file a return. Your clients will complete the Form 8962, which is the premium tax credit form, to reconcile the advance payments to the actual premium tax credit. Details of the 8962 are going to be discussed shortly. Now, if you find that during the reconciliation process that the actual premium tax credit is less than the advance credit payments, the difference, again, subject to certain caps, is an additional tax that may reduce your client's refund or add to the balance due. For single filers, the caps are $300 for household income below 200% of the federal poverty line, $750 if the household income is below 300% of the federal poverty line, and $1,250 if the income is below 400% of the federal poverty line. For all other filers in these ranges, caps are double the amounts for single filers, so $600, $1,500, and $2,500. That's the maximum that they would have to repay. But if they got the premium tax credit and they weren't entitled to it, and they got up to $2,500 and they fit in that category, then that's the amount they'd have to pay back. It's important to report changes in circumstances to get the proper type and amount of financial assistance in order to avoid large differences when your clients file their returns. Reporting those changes will allow the marketplace, again, it's the marketplace and not the IRS, to adjust your client's advance credit payments. This adjustment will help your client avoid getting a smaller refund or owing money that they didn't expect to owe on their federal return. Now, here's an important message I just want to share with you. Advance payments are renewed in September by the marketplace for the upcoming calendar year as part of their annual re-enrollment and income verification process. So therefore, taxpayers receiving advance payments needed to file their 2014 tax return and reconcile their advance payments by August of 2015 in order to ensure that there was no disruption of those advance payments at the beginning of 2016. Now we can simply change those dates. For 2015, they need to file their return for 2015 by August of 2016 to make sure that that's true. If the taxpayers don't file a return to reconcile any advance credit payments received in 2014 to maintain their eligibility for future premium assistance, then they won't be eligible for any advance payments in 2016. So letters have been sent to all those folks who got advance premium tax credit and have not filed their returns, asking them to get that done as soon as possible so that they don't incur a lapse in that advance premium credit. Because of the need to reconcile those advance payments with the premium tax credit and the fact that these differences between these amounts can vary substantially, it's important that your clients understand the effect of reporting change in circumstance. Some examples of this are listed on the slide here: family size or filing status. So you might have had a new birth in the family, you might have had the loss of a child, a family member, or a spouse. You could have any situation that might have changed your family size or your filing status. You could have had an increase or a decrease in household income. You could have lost your job. You might have gotten a raise. These things may seem minimal, but it's really important because these changes can increase or decrease the amount of your advance credit, thus affect your refund or your balance due at the end of the year. Gain or loss of health care coverage or eligibility. If for some reason you lose your eligibility at your job and you're therefore eligible for the premium tax credit, that's a change in circumstance where you'd want to notify the marketplace. Let them know about that and apply for insurance and getting the premium tax credit. Also, and this is an important one, but people don't always think about this, if you move to another address. Now, it may not make much difference if you move across town, but if you move from city to city, it's definitely going to make a difference in the amount of premium tax credit that you get. The plans are different in each area. The premiums are different in each area. Therefore, if you live in a different area, your advance premium tax credit can be different as well. So it's important to remember to report these changes to the marketplace when they happen. Let's take a look at another review question. What must the taxpayer do to receive the advance premium tax credit? They need to contact the marketplace, apply for coverage. They need to estimate their household income. They need to file a tax return, or all of the above. Of course, the correct answer is all of the above. Now, there are more details concerning changes in circumstance on the healthcare.gov website. Be sure that you visit that website. Now, how to claim the PTC? Well, let's talk about how to actually claim this premium tax credit. When your client purchases health coverage from the marketplace, he or she can choose to have the advance payments sent directly to the insurer. We've already talked about that. Or they can choose not to do that. If they choose not to do that, they'll just get all of the credit on their income tax return when they file it. Now, we've said that a client who chooses to get the advance payment must file a return to reconcile any differences. You complete the Form 8962, and this is the form to claim the premium tax credit and to reconcile any advance credit payments with the premium tax credit that the client is eligible to claim on his or her return. Now, the return computes the actual credit because you now have actual income figures. That's why there's a reconciliation required, because the earlier income estimate is probably going to be different from what the client's income actually turns out to be. The 8962 must be filed with the 1040, and if your client enrolled in coverage through the marketplace, but he or she didn't get the advance payments, again, he or she will claim all that credit when they file the individual income tax return. Now, here's an overview of the forms that you need to claim the premium tax credit. The first one that you'll get from the marketplace is the Form 1095A. That's going to have the information on it about how much your advance payments were, how much your premiums were, name and address, who is enrolled in the plan, all of that information about the insurance itself that you'll need to have to complete the Form 8962. Next, you'll complete the 8962, do the reconciliation if you had advance premium tax credit. From here, you'll simply compute the premium tax credit if there was no advance credit taken. You'll then file that 8962 with the 1040, 1040A, or the 1040NR. And that's the overview of the forms that you need and how they correspond with each other. Now here's a bit more about the 1095A. Again, it's issued by the marketplace. They should send it to the client by January 31st of the year following the year of coverage. The 1095A will show who is enrolled in the plan, the premiums for the plan, and also the 1095A will show the premium for the second lowest cost silver plan that applies to the enrolled family members who aren't eligible for other health coverage, as well as the advance credit payments made for the coverage of the eligible family members. The silver plan is used in the computations on the Form 8962. So that's information that's just sent to you so that you can complete the form. The concept of the 1095A is similar to a W-2 or a 1099 miscellaneous. The taxpayer will receive the 2015 information by January 31st of 2016 and use that information to compute the premium tax credit on their 2015 tax return. Then reconcile any advance credit payments if necessary. An individual who doesn't receive the 1095A from the marketplace by January 31st should contact the marketplace, not the IRS, but the marketplace, to ask for a copy. And again, you'll need the information on the Form 1095A to complete the Form 8962. Now let's take a closer look at the Form 8962. Now again, this form is used to claim the premium tax credit and to reconcile advance payments with the premium tax credit allowed. Form 8962 calculates the premium tax credit amount based on a sliding scale, with greater credit amounts available to those with lower incomes. It factors in household income, family size, which family members are enrolled, whether the enrolled family members are eligible for other health coverage, cost of available insurance coverage, and the premiums for the plan enrolled in. The result of the calculation from the Form 8962 and the reconciliation is reported on the 1040. Accordingly, there are two lines for the premium tax credit on the Form 1040 after reconciling the advance payments of the premium tax credit with the actual credit amount, again if necessary. Line 69 for claiming a net premium tax credit, and line 46 for the repayment of any excess advance payments of the premium tax credit. The IRS has also made modifications to the Form 1040 series so that a taxpayer can electronically file Form 8962 with the Forms 1040A and the Forms 1040NR. The premium tax credit cannot be claimed on the 1040EZ or the Form 1040PR. And just a reminder, if your client received assistance through advance payments, he or she must file the Form 8962 to do that reconciliation. I know we keep repeating this, but that was one of the most common errors in tax returns from last year. This is the actual Part 1 of the premium tax credit form, and it's used to determine the household modified adjusted gross income. The dependent's modified adjusted gross income is only included if he or she has enough income above the filing requirement threshold. So, when the form asks for household income, if you've got a high school student living at home who has a part-time job but you're claiming him or her as a dependent on your tax return, they're not included in modified adjusted gross income if they're not required to file a return themselves. So their income would have to be above the filing requirement amount. But let's say you have a college student living at home who you claim as a dependent, but he or she has a job and the income is over the filing requirement amount. Then you would have to include that income into household income. That's the important difference. Now, we talked about this previously, but only taxpayers with income below 400% of the poverty level may qualify for the credit. Now, Part 2 of the 8962 is used to compute the amount of the credit. You would compare it to the advance payments and determine if there's a net premium tax credit or excess advanced credit payments. Line 11 here on the form is used to compute the credit and compare it to the advance credit payments if there are no month-to-month changes in the information that the marketplace reported on the Form 1095-A. Lines 12 through 23 are used to compute the credit and compare it to advance credit payments if there are changes in the required information for any month. It also helps to determine if a taxpayer must complete the shared policy allocation, which is Part 4 of the form. It'll determine if a taxpayer may want to use the alternative calculation for year of marriage, which is Part 5 of the form, and it may reduce the amount of excess credit payments a couple who married during the year must repay. So Part 2's got quite a bit going on. Now here's Part 3. This is the amount of excess advance payments of premium tax credit. If the total advance payments were more than the actual credit, the statutory caps are the repayment limits that'll reduce the amount that's required to be repaid and the amount of the repayment that would be entered on the taxpayer's Form 1040, line 46, or the 1040A or 1040NR if applicable. So that's the repayment portion in Part 3. Now Part 4 is used for the special policy allocation that we talked about, the shared policy allocation. If you have that situation, you'll need to read the instructions very carefully. Make sure that you're completing that if it applies to your situation. This is generally where two people are sharing the cost of coverage for one person. Now Part 5 is used to calculate the premium tax credit using an alternative method for those who married during the year and are filing a joint return, had advance payments prior to the marriage, and they benefit from the alternative calculation by reducing the amount of excess advance payments they have to repay without the alternative calculation. So, if you got that situation where someone was receiving advance payments before they got married, and they got married in the middle of the year, and then they didn't get advance payments at the end of the year, they're probably going to have to repay the advance payments. But this alternative calculation will hopefully make that amount a bit less. So look carefully at the instructions for that special circumstance as well. All right, another review question. Which form is used to reconcile the premium tax credit? 1095A, the 1040, the 8962, or the 1095B? And of course, it's the Form 8962, the one that we've just been talking about. All right, now let's look at some best practices to use when you're interviewing your clients. If your client purchased marketplace coverage for 2015, they'll receive the Form 1095A in early 2016. Now, some of the questions you'll need to answer is, did the client receive the advanced premium tax credit? Did he or she file a 2014 tax return if he or she received the advanced premium tax credit in 2014? Check for the advanced premium tax credit on the 1095A. Verify the coverage months. Who was covered? Is it correct, or does your client need to correct it? Are there multiple policies? Then multiple 1095As may be issued. You want to ask about health coverage as it relates to changes in circumstance. And if there were changes in circumstance, did they notify the marketplace? Are they expecting to perhaps receive multiple 1095As? Now, another question to ask is, did they have any months where they didn't have any coverage at all? And if that's the case, you need to know that as well, because that, again, goes into the calculation. All right, now here's a recap of what happened with the premium tax credit during the 2014 filing season. One of the big issues was failure to file. People who received the advanced premium tax credit didn't file a return. You want to remind your clients that they must file a 2014 tax return if they choose to have advanced credit payments made on their behalf directly to their marketplace insurance provider to reduce the monthly premiums. If they don't file that 2014 return to reconcile the advanced payments, it may affect their eligibility to receive future advance payments through the marketplace. They may be required to repay the marketplace insurance premiums in full for 2016 until they file that 2014 tax return and resolve their issue with the marketplace. They might have received a letter from the IRS or will receive a letter from the marketplace this fall about this failure to file a return to reconcile those advance payments. Now, did you possibly have a client who got a tax surprise and owed taxes this year because they received the advance premium tax credit, had a change in circumstances, and didn't report that change to the marketplace? Again, the advance premium tax credit is based on estimated amounts. The client needs to report those changes when they happen so that the marketplace can make adjustments in that advance credit so that large underpayments don't happen. Starting this year, just like taxpayers reconcile their tax withholding with their actual tax liability and they get refunds or make additional payments, accordingly, individuals benefiting from the premium tax credit for marketplace coverage will follow the same process. Normally, taxpayers may owe certain penalties for underpayment or late payment of the estimated tax. However, to help smooth the process for the first year of the Affordable Care Act, the IRS actually waived these penalties for eligible taxpayers if they resulted from repayment of excess advance payments of the premium tax credit for marketplace coverage. You can learn more about this. There's a notice 2015-0 penalty relief related to advance premium tax credit for 2014. That was released in January of 2015. The relief has no effect on the fee individuals will pay if they choose not to buy affordable health coverage. Now in March, the Federal Facilitated Marketplace released information regarding incorrect marketplace tax statements, the Form 1095-A. You may remember this from last year. Accordingly, the Department of the Treasury expanded the relief it announced previously on February the 24th in order to mitigate any harm to any taxpayers. So any individual who enrolled in marketplace coverage and received an incorrect Form 1095-A and filed his or her tax return based on that form doesn't need to file an amended tax return. The IRS is not going to pursue the collection of any additional taxes from these individuals based on updated information on the corrected forms. This relief applies to taxpayers who enrolled in the federally facilitated marketplace or state marketplace. And for more information on this, you want to see the Treasury announcement at Treasury FAQs. In addition, in April, the Department and the IRS gave penalty relief to individuals who weren't able to file an accurate return by April the 15th. Generally, in order to qualify for this relief, taxpayers must have filed either a federal income tax return or the 4868, the application for automatic extension, by April the 15th. If an extension had been requested, then a tax return should have been filed by October 15th. Now the specifics are in Notice 2015-30, penalty relief related to incorrect forms 1095-A. We talked about the renewal of advance payments by the marketplace, and this is just a reminder of that. Again, that it automatically will carry over if they file their return by August. If not, they may need to contact the marketplace, let them know that they filed it, and if they haven't filed it, they need to get that done. According to the IRS, here's some common errors that were found in the first year dealing with the premium tax credit. Many people claimed their premium tax credit on their return, but they didn't attach to Form 8962. That form needs to be attached to the 1040 if they're claiming the premium tax credit. Again, many of them didn't reconcile the premium tax credit, which is the 8962, Part 2, line 11, or lines 12 through 23 in column F. The Form 1095-A data wasn't correctly reported. This was probably due mostly to incorrect forms, but it also resulted from taking information from the wrong part of the form, not really understanding what those numbers mean and where they needed to go on the 8962. So make sure that you and your client understand what those numbers are when you're putting them on the 8962. Another common error was that a lot of digits were transposed from the 8962 to the 1040. Now again, these are primarily dealing with handwritten returns. Tax software will generally catch these errors for you. Or digits were transposed from the 1095-A to the 8962, so you want to use caution when entering this data into the tax program. More errors that the IRS found. The monthly premium tax credit allowed was miscalculated. Again, This is the 8962, Part 2, lines 11 or lines 12 through 23, column E. If it didn't change all year, you would use line 11. If the PTC fluctuated from month to month, you would use lines 12 through 23. The last common error reported by the IRS is a miscalculated repayment amount of excess advanced premium tax credit. So, when the reconciliation was done, there were errors in that computation, and that was in Part 3, lines 28 and 29 of the 8962. And again, most of these errors were done on hand-calculated returns. In our software, if you input the 1095-A correctly, the information will fill in for you. 2015, some things that you need to know. And just to reiterate, if your client did not file a 2014 return, he or she needs to file that return as soon as possible. And any client who receives the advanced premium tax credit must file a return to reconcile, even if they would have had no other obligation to file a tax return. So make sure you ask your client for his or her Form 1095-A. That's something you'll want to see, just like a W-2. If they're involved in the insurance from the marketplace and they're getting the premium tax credit, you need to see that form. Remind your clients again about reporting those changes in circumstance to the marketplace if they're receiving the advance credit. Now, if they're not receiving any advance credit, but they got their insurance through the marketplace, they're not necessarily required to make those changes known because they're going to get all their credit at the end of the year, and they'll just compute it based on the actual figures. The enrollment period for 2016 started on November 1st and goes through January 31st of 2016. So if they want to go in and see if they can get a better rate, change the plan, get a better plan, find a cheaper plan, whatever they want to do, now's the time to do that. There are special enrollment periods for certain situations that happen, such as loss of a job or loss of insurance. Those kinds of things create special enrollment periods, and for more information, please check healthcare.gov. Now here's some resources. These are the best sites to get information about the healthcare laws. Both irs.gov/ACA and healthcare.gov. The IRS site has information for tax professionals on the Tax Pro page. The draft forms will be available. There's also a publication 974 that'll help with questions on premium tax credit. And please get the instructions and the Form 8962 to help answer any questions. Thanks for watching.